please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. So, market's still under pressure as far as the Nifty goes. The Nifty Bank is doing a little better, as is the mid-cap index. That's the story of trade this Thursday morning. Let's now welcome in Mr. Ravi Krishnan Thakkar, MD and CEO of UCO Bank, who's joining us on the phone line to talk about, of course, how the sector overall is dealing with the aftermath of what's been, a big fraud headline. Sir, is it correct to understand that you have around $412 million of exposure in this entire PNB episode?
See, our Hong Kong branch, they had discounted the bills under letter of credit opened by PNB branch in Bombay. And these have been done on behalf of, these were LCs were issued on behalf of this Gitanjali group of companies. So they have been done in the normal course. The messages came through SWIFT. The bills were also negotiated and after getting the acceptance from PNB. So as far as the due procedure, it has been followed. And we are sure that PNB would honor the commitments in these LCs.
Mr. Thakkar, good morning. Has Gitanjali defaulted on their part?
See, I told you, in our case, it's not LOUs, it is letters of credit, the normal which are issued. So in this case, the liability is primarily on the Punjab National Bank. Gitanjali Group is only applicant from the point of PNB point of view. So the bills have started falling due for payment. We have lodged our claim with PNB, and we are hopeful the things should be sorted out.
Okay. Well, now let me come to the other reason why bank stocks were falling. The Reserve Bank's new rule of putting all accounts under NCLT if they are in one of the restructure schemes and are not restructured for 6 months. How do you expect this to impact your provisioning?
See, if you see in short term, definitely it will lead to increase in the provisions. The main logic behind the new resolution plan of Reserve Bank is to not linger on the matter, but the first emphasis on the resolution is and find some plan of action to make the account, keep it performing, I would say. In case that is not happening within a reasonable time, then obviously what they are saying, you have to go to NCLT. You don't have to wait for any other options like any other restructuring if in case it's not viable and all that. So what they are looking at is a faster resolution. And obviously in short run, there would be a pain. But I think in the long run, it should be good for both the banks as well as the corporates.
Okay, your gross NPA crossed 20% last quarter for the first time, I think. Going forward, how do you see the asset quality?
See, if you really see, in terms of percentage, if you really see, the NPAs no doubt have crossed 20%. But if you see in the last 3 to 4 quarters, the gross NPAs have not increased to a great extent. There is no nominal increase has happened in the absolute term, in the amount wise. The percentage term is going up because we have as a consciously degrown our balance sheet. So that's the reason for the percentage going up. But otherwise, overall, the absolute term, the NPAs have not gone up any substantially.
So it's been 9 quarters of losses at the bank. Do you see a turnaround? By when can we expect earnings to come back to black?
See, our main now focus is on recovery. And that is the main issue which is going to affect the bank's balance sheet. And a lot also depends on the resolutions happening under the NCLT. Because if you see our major portfolio in our NPAs comprises of the loans to the corporates. And a major portion now has gone to NCLT. So we are expecting these resolutions to start happening. And it may not happen in this quarter, but I think in the next first 2 quarters of the next financial year, that is June and September, we are expecting a lot of this movement in the NCLT cases, and especially all the bigger corporate accounts. So that should give us a good return in the sense that we have made adequate provisions against these accounts, and we should not be taking much of a hit. And that will help us clean the balance sheet will also help us in a turnaround. As far as the bank coming back into black, I think we have to wait for 3 to 4 quarters.
Okay, another 3 to 4 quarters. Fair enough. All right, Mr. Tucker, we'll leave it on that note. Thank you for joining in. Moving on now to the big newsmaker of the day. Mr. Uday Kotak says, while the larger picture of the economy may remain challenging, there are some green shoots available on the micro front.
I think we have seen a close to 8 to 10% correction in the big caps and probably a 20 to 30% correction in the small and mid caps. So somewhere in the single digit corrections from here is what I would, in the big caps, is what I would see as getting the markets to a fundamentally more healthy level. Now, whether there's 5%, 10%, I think that's something which would give fundamental corrections. Over the last 3 or 4 years, whenever we would talk about chasing growth, we had a wonderful macroeconomic tailwind in our favor. This time around, as I speak to you, I think micro has picked up. We are seeing growth on the ground, but the macro tailwinds are not as favorable as they were over the last 3 years.
Big move in Biocon from yesterday's low. That stock has seen a real big move, now approaching 600 on that stock, so phenomenal. But one stock which has seen quite a bit of selling pressure all through the last couple of weeks is Motherson Sumi. The street was fearing some cut in earnings. Vivek Chand Sehgal now joins us, chairman of the company. Mr. Sehgal, good morning. The stock's down 15% in 6 days, and the concern is that the demand weakness in the European and the US region will impact the overall earnings for the company. Would that be a genuine concern?
First of all, I don't see any weakness on the sales side. I mean, we had the last quarter, we had 31%. We had grown on sales. So I wonder whichness are we talking about? But it could be in certain small sectors or something like that. But I have no idea of what you're.
Okay. Mr. Sehgal, the SMR business margins were hit due to the startup costs and higher raw material costs as well. Can you tell us if these problems have been taken care of, or could they persist in the near term?
No, because you see, there is a 3-month lag between the pass on of raw materials and all that between the car makers and ourselves. In fact, we've taken the brunt of it in the last quarter, and yet, as far as our numbers are concerned, they're pretty good. But look, there is a 3 months, 4 months, 6 months in some cases time between us getting the money back. But before the 31st of March, definitely we would have tried to close down everything because the year financial year changing.
Okay, are the startup costs a 1 quarter thing, or can we expect them to crop up in next quarters as well?
So I think definitely in this quarter and the next quarter, there might be certain startup listing and all that. But it's important for us to understand that we are just giving you that number. It has already been taken out from our margins. We've already reduced number. And we're just giving that, look, this is a startup cost, and this is happening because, plants are coming up for fructification. And in different stages of how do you say, and 3 of our biggest plants in our history in SMP are going to fructification at the same time. That's so I think that's something which might have a dip here and there. But we are just never a quarter-on-quarter company, right? I mean, we've been saying it for the last 15 years.
No, fair enough, sir. But just to go back to your point, you said it's already been taken out of the margin. I just wanted to understand that. So, because of these startup costs, does it mean that margins won't dip any further, or could there still be pressure on margins?
I think there's going to be anything ordinary. We have already said that the capex is coming into the end of the capex cycle because orders, we got orders the last time we had guided you that about 15.2 billion euros worth of new orders. So the plants have already come in for that. So generally it will be on the lower side. But yes, the advanced planning and in the quality approved and all those things will continue. And hence there is going to be a slight, maybe a little bit of startup cost might be there. But I think by and large it is already over.
On S&P, please guide us if there is potential for double-digit margins, since you maintain that the margins can be scaled up.
We never guide you for margins. Normally, we are focusing on ROAS. And the reason for that is, think about it. We have 3 plants, which is the Salto plant in Mexico. We have a new plant in Castanet in Hungary. And we have a new plant coming up, which in April we will inaugurate. It's coming up in Tuscaloosa in Alabama. And all 3 of them, we will added 1 billion euros to the top line of organic growth. So, these are big plants. They have a capability to generate better profitability and once they're stable. And once the customer starts to regularly buy from them, they have huge potential to contribute. So think about it. Just these 3 plants will add $1 billion to S&P. Is approximately doing 2-point-some billion just now. About a 40% growth coming because of these 3 plants. Motherson has not seen such such big plants so coming together. So that's why a little bit people are getting a bit worried about it. We are not worried at all because from our side, it's under control. There's no panic, no nothing. It's very, very good. In fact, we can already see the thing breaking into profitability.
Mr. Sehgal, SMR business revenues have fallen. Of course, that's because of forex translation losses. Now, is that something to expect in the coming quarters as well?
So these are translation losses. We don't really worry too much about. You see, what happens, there are 2 aspects. One of our customers is impacted in China because of, I think, a different reason. So that's one. Secondly, this euro-dollar thing, the euro has become very strong against the dollar. A lot of our sales in the US, which is the largest market at the moment for us, is impacted. But the profitability is up, and that makes a difference. At the end of the day, the sales and all that, we're 100% OEM. So whatever the sales are, our profit becomes better. That's what is very heartening for us. We think that's what distinguishes from the boys.
Okay. Lastly, Mr. Sehgal, will you have to undertake a lot of capex to execute the new orders?
Most of the capexes are through. So other than just balance out and things like that, we don't anticipate as of now. Next quarter, now we will tell you what the order situation is. If those order situation freeze and we need another, you can be rest assured Motherson won't hesitate to put that plan.
All right, Mr. Sehgal, we'll leave it on that note. Thanks very much for joining in and giving us the business dynamics as they stand right now. That's Motherson Sumi. Stock under pressure, given some of the immediate issues that he spoke about. Well, back to the markets. You're still looking at about a 40-point drop on the Nifty. It's slightly better off. Little bit of a recovery, if you can call it that. The Nifty Bank and the mid-cap index, Anuj, they've been the better off indices. What is the reading? And on mid-caps, stocks like L&T, Infotech, Biocon, Group Finance, should anyone take heart from a little bit of this green?
The only problem is today's expiry. So, at 10 a.m. you don't want to take an aggressive call because, it could really fly in your face. I think the best would be to observe the market now between 10 to 11 because, whether the high of the day gets breached or the low of the day gets breached, so to be, it could go either way because, it's expiry day and we've seen in the past, it doesn't help you if you take large positions at 10 a.m. thinking, what the market would do at 3:30. Let the market decide that for you. But clearly, ad nauseum, I want to make a point once again. IT obviously is the, sort of white knight for the market, if you want to call it like that. Big gains across the board. Now, other stocks like KPIT, Tata Elxsi also participating. So at least there's one sector which is in a bull market of its own, and that's not getting disturbed. Most of these stocks are making highs of the day. Whether, in the second half you see IT also falling or you see banks recovering from the lows, that I think is going to be the story. But for whatever it's worth, the mid caps are relatively resilient. So let's see. Promises to be an interesting day, of course.
Absolutely. Very interestingly poised. And at this juncture, we take your leave on Bazaar. Thank you very much for being with us. But stay tuned because lots of trading ideas coming up next on Chartbusters.